QQQ. Alright guys, Invesco QQQ Trust. That is, I believe, the ETF that tracks the Nasdaq. Compare. Just to make sure. Let's compare this to the Nasdaq index and look at that correlation, guys. Beautiful, 1-to-1. All right. So what do we have here, guys? I haven't checked the Nasdaq in a while. I've checked individual FANG stocks. I've checked the SPX, the Dow Jones. I think it's time to give a little love to the Nasdaq. All right. Let's draw our lines in the sand. Monthly defined breakout line. 186. Monthly defined breakdown line. And here you had the same situation. I look at the monthly closes to draw those lines, but when you have a gap down and then closes above, I'm using that as a low watermark. We had a monthly candle close below that breakdown line, and right now in the current month, we're touching it. Touched it just a little bit. I don't know when, maybe yesterday, this morning. And we're back at that breakdown line, 158. Wow. All right. So you could even see, I could start guessing right now, because you see that wick during the month, the price action went all the way down. When I'm going to zoom in on the weekly, you're going to see a pullback happening on the weekly, and on the daily, we'd see it even more details. And the pullback continued from the end, probably the end of December, and January continuing up, all the way up here. So that's like one of the powers of the monthly candles. Those wicks reduce a lot of noise, but also condenses those candles. So even other than the wicks, entire candles are just compressed into one candle, reducing again volatility, adding everything together, condensing the time. All right, that's enough. All right, let's zoom in. Not yet. Hold on. Let me get that measured move. Because right now we should be seeing this as a pullback to the breakout line, breakdown line. Monthly. See the MA, I'm looking at right here, these numbers when I'm moving the mouse. The MA has been going down for, okay, November was the peak MA, 12, 170.27. December, the moving average went down. And December, January, it's keeping going down. And that's normal, right? Because the price action is below the 12-month moving average. Now it's declining 2 months in a row. It's going to create additional pressure. So pullbacks, we got to see them as opportunity to short when we have the weight of evidence that it has been extenuated, that we're starting to get some divergence. We're getting clues that run has emptied its gas tank. All right. Okay, back weekly. Stage analysis, guys. Okay. That was a beautiful, long stage 2. Outperforming the SPX. The Nasdaq was really the place to be in 2017, 2018, until late 2018, guys. All right. 30-week moving average going downwards. Let me see what else we have. Clues. That's the first red candle, was a big warning sign. But when you have those big warning signs, when you're still have full steam, or you're still steaming up ahead, you create some damage. You see, it went to start creating volatility, had to go hit the 30-week moving average, then got another boost up. But at the end, that damage slowed you down. The top was close by. And after that, you get all these big red candles. These are big damage. You can't forget these. You're going to need time to digest all that, all those down days. And here's another one here, right here. Big red damage. And you see the volume on those green candles? They're starting to go down. It's only, this week. Yeah, they're starting to go down. So let's see how this week ends. This is Monday's data. Tuesday, Wednesday, Thursday, Friday. Yeah, let's see how that, but that's how you want to see pullbacks. Pullbacks, you want to see them on contracting volume. You want to let everything like reflate. It's like the price action is going back up, not because there's more buyers, but because there's less sellers. The sellers have lifted the gas pedal on selling, and it's letting the price action flow back up. So what we're going to see now, you're starting to overperform the SPX. You're above that 0 line. You're still below a declining 30-week moving average. That's why it's gray and not green. So when the price action has finished, and I don't know when it's going to be finished. Wow. Where's my weekly? Do I have a weekly defined? Where's my weekly defined breakdown line? It looks pretty much at that same area, guys. Pretty messy. Okay. Here's my weekly defined breakdown line. So we're already above my weekly defined breakdown line. Now we're going to heavier duty monthly defined support and resistance. Wow, could this actually start pulling back now? What I want to see also is the Mansfield trying to go underperforming under the 0 line, and that's when it starts flipping over. That's when it's a good area to take a position short. If you have that, if you're still below the 30-week moving average, if you're below that monthly defined breakdown line, below the Ichimoku cloud, lower highs. So I don't know here where it's going to stop. So we're going to need really a red candle to confirm that we're flipping back over, guys. Am I making lower lows? Starting to. So let's see what's going to happen, guys. But this is really starting to hit. It's going to start hitting really important resistance right here, guys. So let's see how the week ends. If it keeps piercing through, if it goes back in the cloud, then after that's going to go challenge that natural. Oh, here it gapped up and went down. It's going to start challenging that natural resistance right here. And if it goes back above that, well, then you're back in the cloud, back above the 30-week moving average, back into a stage 3. And after that, you really have to consider, just for that, in that chart, that you're back, that the stage 2 continuation could continue if it went back above 190. Doesn't mean the total weight of evidence, the macro technicals of all surrounding what's around the chart, like the advanced declines, the momentum index, the sector, its peers, like how the overall market is doing. But other than that, if this goes back up above this high, if it goes back above this weekly defined natural resistance, back above the 30-week average, guys, well, the whole scenario changes. But for now, simple pullback to the monthly defined breakdown line. If it goes back above, right here, you got to wait to see where it turns. Sometimes it pierces through, it sinks through these levels, and after that, there's a hard turnaround going back down. So keep out for these levels, and you don't want to go over those previous highs. That's not a good sign if you go over this high right here of the 170. That's a final 173.29 there. That's if you close above that there, you got to really take a breather and say, something's wrong. That stage 4 is not going to continue. It needs more time to marinate. All right. Okay, guys. Hope you enjoy it. Subscribe if you like it. Thanks for watching.